welcome back. It is your Loan Depot Ignite Girls. I'm Erica Benigni.
I'm Shelly Borman. We are minus one Ignite Girl today.
Like you said, we've got busy lives and pet emergencies happen. So Lisa's not with us, but we're thinking of her.
Yes, for sure.
So we wanted to visit a little bit about home equity lines of credit. You may have heard the term HELOC, but right now we are finding many clients are asking questions whether or not a home equity or a cash out refinance makes sense. So we wanted to explain the difference between the two and some of the uses of a home equity line. So first of all, if you've never had a home equity and you don't know what it is a line of credit that is in second lien position behind your mortgage. Or if you don't have a mortgage, if you own your house free and clear, you can have just a home equity line of credit in first lien position. Your home is the collateral for that loan. You are able to utilize that line. It's a revolving line of credit, and I don't like to make the comparison, but kind of like a credit card. You're given a limit, you draw on that, and then you pay it back as you choose. Most products are interest-only payments
For 10 years.
For 10 years,
Yeah.
and then convert to a fixed amortized. One of the things a lot of people don't realize is that a home equity line can be used for many, many things. So I think people often think it has to be used for home improvement or it has to be used for landscaping, something to do with your house. But actually it's your money, it's your equity to use. So you can consolidate other debt, you can get rid of credit cards, you can pay off a vehicle loan, you can
pay for your child's wedding
right.
or medical expenses.
Anything.
Yeah.
You're able to use that. And really, when you start looking at the numbers, a home equity line makes a lot of sense rather than paying higher interest rates on say, a credit card.
Well, and what I like to say also, like for me, a home equity line of credit is almost an insurance policy.
Very much.
In some ways, because just because you have a home equity line of credit secured by your house doesn't mean that you have to pull any money out and use it. And in fact, there's a large number of people who have a line of credit that is never opened, that they never use, but it's peace of mind. They have the money there available for use should they ever require it. And I think that's just a huge, huge benefit. And the key is though, right now, let me just say, it's easy to get money when you don't need it.
You don't need it.
So it's a perfect time to look into a home equity line of credit. And then it's available for when you do need it.
Right. And again,
that's huge.
You can put that line in place. You don't make payments on it until you need it. So you may not draw on that line for 5 years, but you're in a position today that you can put that in place. So one of the other things that we're having real estate agents reach out is the question regarding cash out refinances versus a home equity line. And the reason that that's become more prevalent right now is because obviously we've been in a rising interest rate market for the past 4 or 5 months. And so people that took out mortgages 3 or 5 years ago, their mortgage rates are very, very low. Yeah. So to refinance that to take $20,000, $30,000 out for home improvements doesn't make sense, where they could tag a $30,000 line of credit behind their mortgage that they have a lower interest rate, and that combined payment is going to be lower. They can pay that line of credit down, they can redraw on it as they need, but they're leaving their mortgage as is, where a cash out is going to rewrite that mortgage and be subject to current rates.
Right. Exactly. And that's huge. That's huge. We have access to a plethora of HELOC products. There's benefits and differences, minute differences between all of the products. And that's really where we come in, is in meeting with your clients and talking about the pros and cons. Once we understand what their goals and objectives are, we can help plug them into the right product, plug you into the right product if it's a home equity line of credit for you. To give you an idea, let's talk numbers just a little bit. So let's say that you pull out a home equity line of credit or you open a home equity line of credit for $250,000, but you use only $100,000 of that $250,000 line item. Yes, if you're within the 10-year draw period, you still have access to that additional funds. But if you've only pulled out $100,000, you're only paying interest only on that $100,000. So I did the numbers. Interest only on a $100,000 loan at, let's say, an interest rate of 6.875%. Yes, that sounds high, but you're looking at a monthly payment of $572.92 interest only. That's paying off a car potentially. That's paying off high interest credit cards. Student loans. I mean, it's so easy to pay off things
and consolidate
for a lower monthly payment. When that goes to the draw period or to the repayment period that's amortized over the next 20 years, then that payment goes up to $767.81 on that $100,000. We will always be looking and managing our clients' debts and home equity lines of credit because there may come a time here in the future where it makes sense to roll that HELOC into a refinance.
And one of the things I'm not sure if we mentioned earlier, a line of credit interest rate is tied to prime, so it is adjustable. It is moving.
Really good point.
So the numbers that Shelley gave are based on a 6.875 rate. We don't know what that rate might be when you get into the repayment period. It's going to be whatever prime plus your margin is. So that's when we would be communicating and watching for opportunities that might improve your financial situation in doing a refinance. If mortgage rates come back down, where it makes sense to roll your first and second into a loan.
And really, so I mean, I know we're getting ready to wrap it up here, but I think that is the only con that I can think about in having a home equity line of credit is the fact that the interest rate is variable. So
otherwise, there are so many uses: peace of mind, flexibility, just better use of funds.
Yeah.
So if you don't have a home equity, now is the time to get a home equity line of credit.
Yes. Put it in place now before you need it so that you have access to it when you do need it.
And one last thing, a lot of times with the companies that we use to do our home equity lines of credit do not require an appraisal, and the closing costs are minimal.
Yeah.
So you can put a line of credit in place for very little cost and then have that to use down the road.
Yeah. So reach out to us today. Have your clients reach out to us. We would love to help you, your clients, with any of that. We can answer any questions you have. And
we'll see you next time.
Yeah.
Cheers.
Bye-bye.